Grameen Capital was set up a couple of years ago to be really a bridge builder between the microfinance institutions and mainstream capital markets. I think what we realized was that the sector in India, the microfinance sector, if you really look at any of the projections, is estimated to be about $50 billion. The supply is about maybe a tenth of that, close to $5 to $10 billion. And so there's a huge gap that needs to be covered in terms of both access to poor and access to finance. And therefore, donation, grant, subsidized debt were never going to be able to create and fill that gap. And so capital markets and access to mainstream capital markets was critical for the sector to meet its true potential. And therefore, Grameen Capital India was set up to be able to help to connect microfinance institutions with the mainstream capital markets, thereby helping them to access both debt and equity to meet the growing need for the sector.
So can you explain how structurally that works? How does a microfinance organization such as Grameen work with the capital markets to actually bring upon the flow of capital through all of these different structures?
So I think I would start by clarifying that we are not a microfinance institution. The Grameen Bank in Bangladesh is what one could loosely call a microfinance institution, which does the lending to the poor. In India, the model that Grameen Capital India follows is different. We help microfinance institutions, that is those who are actually doing the last mile lending to the poor. We help them to access and raise capital for themselves so that they could then on-lend this to the poor families that they work with. We've understood that one of the biggest constraints to microfinance today is capital. The more capital that microfinance institutions can raise, the more poor they can reach out to. And so to remove this capital constraint, or to address this capital constraint in some sense, Grameen Capital India was set up. So we are not an on-lending institution, but we are purely an advisory entity, an arranger, an investment banking type of entity, but focused on microfinance, focused on social enterprises, serving the poor and the base of the pyramid.
So an investment bank for the poor?
Yes,
Essentially.
simply put, that's what we call ourselves, yes.